It's Kareen here, and what you're about to witness is one entrepreneur's journey on how they navigate a challenge or need support in an area of their business with me. Results may vary if you try this on your own. The purpose of sharing this with you is to help you know that help is always available and you don't have to do it alone.
I can't see my way forward right now because just to launch in Europe, it's going to take me 2 months at least.
And then the double down that's happening in Canada, the inventory sales that'll be happening there, you'll still be profitable out of Canada.
Yes.
And so it's really, and you're hoping.
We'll double this year in Canada, I'm hoping.
Yeah, I'm sure you will. So I get it that there's like a inner struggle of like, why can't this be easy and just the world not have this stupid tariff or FDA crap? Like, this is should be just simple. But I think, so the ways to look at partnered inventory management when you don't have the cash flow to create more inventory.
Or actually, I'm thinking about partnerships as in, for example, I'm working for a Canadian client. There's a chance he might just buy 2 containers. So a partnership would look like directly sending them the product and I still would get a contract for 2 million or 1 million or 5 million. So that would my deficit, or even if it's like 50K, like I just have to move the needle. So in terms of partnership for orders, not for storage or any operations.
No, I was thinking partnership because the third problem that you mapped out was not having inventory
in the US,
but you can't have because you need the FDA approval. Is that correct? Like, I'm understanding that correct. So that just has to be on pause until the FDA piece gets taken care of.
Or the bamboo products, the one that I've just launched, scaling that and make that.
So, but you still need cash flow for the bamboo products?
Yes.
Right? So you still have an inventory management issue.
Yeah.
The bamboo products, where are they made? China. Now, China does have co-mans that get involved with deals on carrying expenses to provide inventory with payment later because they're a partner in your business, meaning as a co-man, like you give them either a percentage of the sales of every item. It's kind of like you're pre-buying inventory and then you pay them later. So there could be some inventory management based out of China that benefit you from a cash flow standpoint to get access to more products, scale that, because you know how to scale sales. Like, if being that you're the Amazon queen, to have a new product to put out into the market, I think is a very smart move in the meantime of the FDA, and not stress so much about the US market until for the other product, the palm leaves, until the FDA approval goes through. But you need cash for that too. So what I would do is, because you have so many different lines of revenue, the way I would look at it is like, how can my lines of revenue generate me gross that allows me to reinvest back into these priorities?
Mm-hmm.
I think what moves the needle the fastest for you, because you've had traction on the existing product, because you don't know the turnaround time before you get FDA approval, I would ride the wave of what you can control. So it's very smart to have the Canadian market going and this bamboo product going.
Okay.
So then figuring out what you could do maybe from your service-based company, the Amazon services that you're providing. Can you have a gross or net income from that you're leveraging to reinvest back? So you're being your own lender, basically, from your own entities.
Okay. I can do that?
Yeah.
Okay. Yeah, because I have like 70% profit margins.
I know, like, service-based businesses make so much good money that, like, why not loan it to yourself? A promissory note between your 2 entities of the amount you need.
Okay.
And then whatever terms you want to put against that so-called loan. So it's just, whatever prime is these days, 6-7% in X amount of time. I mean, it's your entity. So it doesn't matter if you want it on paper to land that way.
Yeah.
Just so you have the audit trail for the business.
Yeah.
But then you're investing, again, you always want to leverage your own entities, kind of be your own bank.
Right. That's actually a smart idea. I didn't think about it.
Yeah, you're sitting on so many different revenue streams.
Right. And how complicated does that get for taxes or bookkeeping, or is it simple? Or
So let me think. How would a tax accountant look at that? All of it rolls up to you. Are you a sole proprietor on all of them?
Yeah.
So, and you're treated an S corp across all of them?
This is S corp. The other one is an LLC.
The service one that makes you 70% margins needs to be treated like an S corp, girl.
I need to. I didn't.
No. I'm telling you this right because I was in the service industry for a long time. Otherwise, every single dollar that's above your expenses, you're going to pay taxes on. So when did you establish that entity?
Last year, August.
I would definitely get on. If you filed yet for last year?
I have not.
Okay, fantastic. So what I want you to do you have a good tax accountant?
Yeah. Okay, change it now.
I want you to, well, they have to actually go file that you're going to be treated. There's a form they have to submit that says we're converting the LLC to be treated like an S corp. There might be like a few thousand you have to pay for that now. It's crazy. But you want to, and then you have to then create a payroll for yourself.
I do have that not for the consulting. Should I do it for?
Yes,
payroll?
For the consulting.
Okay.
Your tax accountant should tell you how to set this up, right? Like, so that then it's the payroll from 2024.
2024.
And then you'll have penalty because you didn't pay taxes the right way that year, which is fine because it's much lower than paying on a 70% margin on gains for the year. So I would course correct that right this year. You're still, I think, within that window if you haven't filed yet to hopefully do that paperwork, get treated like an S corp. You're going to get a payroll, and then the finance management of an S corp is a little bit different on what you get taxed as a business as well as an individual for what you claim. So have the tax accountant run through it with you based on your numbers, because your margins are going to be so much lower on your product companies than your consulting companies.
Yeah, and that's what I thought. It's such a huge difference between a product and a service.
Yeah. So milk the service business as much as you can to start seeing how it can fund when you have inventory challenges and become your own lender.
Right.
Across your entities.
Got it.
And so from a tax standpoint, if your consulting company is a promissory note to your product company, to T-Docs, you write up the terms of how much you want to move over to that, for what reason, just saying it's a loan.
Yeah.
And then you pay it back once you kind of have the flow past this FDA situation of sales.
Got it.
And then eventually the money goes back into it. What I would like you to look into is a self-directed 401k that your earnings off the consulting company can contribute into. And then you could do the promissory note from your 401k to your new entity, to the entity that needs the money. So this requires a tax strategist. I am not that, but I think you qualify for this type of move too.
Okay.
Then the earnings you make back to pay off that loan from your product company to your service company should be tax-free because it gets paid back into your 401k, your self-directed 401k. So a self-directed 401k is different than a standard 401k because a self-directed 401k allows you to move your money from that product however you want and to create the terms for it. I'm not sure, though, if you can go from
I'll figure it out. Yeah, this is a good lead because now I have questions to just take it to my accountant and ask.
Yeah, and some accountants don't know much about the self-directed world. So don't be surprised if they're like, no, you can't do that. Like, then don't stress yourself and go down that route. But I know that there are different like tax deferred ways to move your money. But even still, what you want to ask them is, if I take this loan amount and apply it to my product company, do I have to pay taxes on the income from my S Corp, the new S Corp, the consulting S Corp, for that amount that I'm loaning my other company?
Got it.
Because what I don't want to see happen to you is, let's say it's a $200,000 loan or something, that now you have to claim the $2,000 income because it's a personal loan. It shouldn't be. It should be a business to business, and it should look like an expense on the books that you took the money as XYZ S Corp and you're investing in ABC product company should look like that. So that's what you want to make sure is clean so that you personally are not paying taxes on that transaction.
Gotcha.
But if you don't change the treatment of the LLC to an S Corp treatment, you definitely are paying any taxes on any surplus in that company.
And we were just talking about this because we're seeing money come in this year. I'm like, whoa, like, so
yeah. It's a good time to course correct a little and then also just understand the tax game a little bit better across the earnings for sure.
Okay.
Because we are masters at spending, like in product companies, right? Like it's all about spend and you always come to zero. And even in service companies, entrepreneurs are treated and taught to like not have any earnings at the end of the year. Then you're broke all the time.
Yes.
So if you're now starting to see a nice surplus of cash coming into all your businesses, then you definitely want to have the tax deferred products where you can also, like your tax account, you talk to a Roth IRA or a SEP.
Yeah, that I think we have. Yeah,
a SEP or a 401k set up so that like you pay yourself first, basically, which lowers the amount you pay for taxes.
Right. But in that also, somebody told me that there's some catch. When you pay yourself first, something happens, and we were like, no, let's not do that. I can't remember what it was.
If you pay yourself like in a protected account, that's what I mean by paying yourself. Yeah.
So I do joint taxes, like with my husband, and he has a high W-2. So I think I still have to.
Yeah, and so it's also good to ask, like, should you be filing joint, right? Because if he's in the high, like 300-400K a year plus bonus plus whatever, and then on top of that, now you're going to be bringing in 6, eventually 7 figures through your businesses. Like you want your tax structure to be corrected for sure now, like as you're establishing things. Just want to remind you that breakthroughs and strategies are here for you. You don't have to be isolated on your business building journey. If you'd like to have a chance to connect with me and let me be all up in your business, go to heykareen.com/connect and a team member will share how you can obtain the best support at this time. You always can have me in your pocket by leveraging my AI. Go to heykareen.app, download it, and start chatting away. And of course, I am always here, willing and ready to be the support you need. All you have to do is ask.